Hello, time to examine Apple, a company that's been doing awesome. Look at that over here. If you actually got this stock back in 2010 or so, you could have gotten it for like what, $11 or so, and right now it's 160. Or if you got it even earlier, like $1, two, like it was like so cheap back then. From that time, it has grown tremendously, obviously, and it's one of the stocks that they don't seem to be like super affected by the current downturn. It has dropped a little bit, like 10%, but generally speaking, I think it has dropped less than normal. You typically see an around 20% drop in most of the tech companies right now. This kind of comes to show how important Apple is in today's markets and how well they are doing. Now we're going to examine the stock and check whether it's a potential good addition for our portfolio. I used to have Apple many times really in the past, bought it and sold it. I have traded multiple times. Never really held it for too long because I wasn't, to tell you the truth, I was never certain whether their next phone is gonna be as successful, but they kept, they kept succeeding, and so they are doing better and better, and that's nice to see. So let's take a look at Apple here. So the outstanding shares is sitting at 16 billion. That's a lot of shares. But is it going down? It is actually. It's going down massively. So it was at 26 billion. So I guess they they had a lot of outstanding shares in order to be able to buy them back at some point. So they seem to be believing that the company's stock price is actually undervalued right now. They keep on buying more and more stock of Apple. And Warren Buffett, obviously, Charlie Munger have bought a lot of Apple stock too. They must know something, right? So the dividend yield is 0.55%, which is probably very low. If we examine their payout ratio, I'm pretty sure that's gonna be an absolute big amount because of the amount of shareholders. But in relation to the cash flow, it's probably gonna be low. 15% is the payout ratio, which is fair, and it seems like it keeps increasing. So you may be getting some nice extra cash from holding Apple, or because Apple is becoming sort of like a value company as the years pass, and I guess they want to reward investors with a little bit of dividends. Maybe they don't expect that much growth over the next years, and that only makes sense. So income statement of Apple over here. So bring it down to 17 to 2022 over here, and you will see here that Apple is actually still enjoying some nice year-over-year growth even after all those years of growth, which is absolutely insane. I mean, they seem to be doing better and better. This is why you're seeing their stock price like being so high and higher every day, really. Apart from this current slump, I guess, but the chart never lies. It was growing massively and becoming parabolic, and I hate parabolic stocks to invest in because when something goes parabolically up, it could go parabolically down, and so that's something that I wouldn't want to witness as a stockholder. Now that doesn't mean it will happen with Apple, of course. Now we can see here that the net income of the company is also increasing massively and really increased in 2021. Actually, 2021 Apple killed it. Looks like they made a ton of money over here. And looking at their balance sheet over here, you will see that their total, well, let me find it here, the total equity is also growing a lot. Now you will see that it was 90 billion over here, and then it went down to 65 billion in this one. And you can obviously dig deeper and see what kind of things happened that led to this kind of reduction over here. But frankly, I wouldn't be too worried for Apple because, as you will see later, their cash flow is amazing, and I'm pretty sure that this kind of liabilities probably have to do with maybe potentially getting some debt, or maybe potentially like financing for some other purpose. You will see here that they do get quite some debt in every year really. So they seem to want to buy back shares, and instead of actually selling shares to investors and diluting investors, they prefer to get some debt, because that makes sense, because they have a lot of cash flow. And you may be thinking, why would you get debt if you have a lot of cash flow? Now, debt is important, especially when you have cash flow, because money, I mean, even if you have cash, you can use it as a collateral to buy more money, to actually borrow more money. And because you can use this money to make money, it actually makes a lot of sense to borrow some money for a little bit of interest, rather than actually directly use your money to pay off all your debt and just use your cash flow, because this way you tend to grow much slower than actually getting some debt. So debt is very, very important for companies, as long as this debt is used for expansion and for growth. So don't think that the company having debt is a bad thing necessarily. If it's managed debt, it's a very, very good thing. And if they use this debt to actually make more money, so if they have a lot of investments that are doing well and they are growing, generally speaking, it's a good thing. So we will examine that in the cash flow statement, and you will see here that obviously the net income of the company we have examined is massive, and you will see that the cash from operations is very, very positive, and this is what matters in the long run, right? It keeps increasing every year, so that's amazing. And the cash from investing over here in the last few years, they actually seem to be buying a little bit of stock. They sold a lot in 2019. Maybe they expected a downturn in 2018, but then they started buying again, I guess, in the last couple of years or so. And cash from financing, you'll see here that they are still paying debt, paying a lot of debt, outstanding debt, and also repurchasing common stock. This is what they're doing. This is what Apple keeps on doing. I would love that as an investor. This is absolutely amazing for investors. Apple repurchasing its own shares. It's absolutely awesome. You have to love it as an investor, because now you own a higher percentage. Without doing anything, you own a higher percentage of the company when Apple buys back its own shares. So that's amazing for you, because your stock is worth more automatically. At least, as objectively speaking, because the market could, of course, bring it down, but objectively speaking, it is worth more. There's less of it. So free cash flow here, and this is what I was saying earlier. Look at that. This is growing tremendously. Apple is at a point where it's making almost $100 billion, almost $100 billion a year, which is absolutely insane. And it's also growing. So, and even when paying a little bit of dividend. So if you give it a multiple like this, if you picture that, let's say Apple is currently doing, let's say 80 billion, give it a multiple of 20, it becomes 1.6 trillion dollar company, and this is 2.6 right now. However, lately they have been doing 92 billion, so this is a big difference, and also growing in that past year. So if you take a little bit of a closer average, you can maybe get it to 90 even. But even if that's the case, the thing is, the company is growing tremendously well, and you will see here that they do have debt that they are, it's compared to equity is still pretty large. It's very, very managed, because their cash flow is amazing. And in order to understand what I mean by that, you can take a look at their balance sheet over here, and let's take a look at the total liabilities of the company. The total liabilities of the company for the current last 12 months is $287 billion, right? $287 billion. And the cash flow that the company makes is about 100 billion every year right now. So if Apple wanted to pay back all its debt, it requires about 2.5 years of free cash flow. As you can see, over here is the free cash flow. Let me find it over here. So it would require 2.5 of these years basically to repay all of its debt, pay back all of its debt. And also remember, they are using a lot of money to repurchase their own shares. So this is very, very well managed debt. I mean, they really know what they're doing here. So I'm not worried about it at all. when a company makes that much cash flow and you see what kind of actions they are taking. This is why you need to examine the cash flow statements, the balance sheets, and the income statements, because they tell you a story. You can understand what's going on in a company just by looking at these numbers, and this gives you a very, very detailed story about what's happening with Apple right now. They're crushing it. And so, would I buy Apple? I would, yes. I mean, obviously, I would want to get it a little bit at a little bit of a lower price, yes. So if there's a little bit of a crash continuing right now, and there's a continuation of the current stock market slump, especially in the Nasdaq, I would love to get a little bit of it, maybe at 150 or so. I think I sold back at 115, 120 when there was like a little bit before there was the recent split, really, is when I sold last time. So yeah, I would love to get it at a lower price if possible, because that will give me a better entry, really, and a better valuation. However, if I'm looking at it objectively, it's a little bit overpriced, but given the fact that it's a massive name that's making massive cash flow and is still growing a lot, I am comfortable with buying Apple even at these levels right now. Again, even if it's slightly more than what I would want to get it for, I'd still buy it. Yeah. So thanks for watching the video. I hope you enjoyed. If you did like it, please take a look at this video, which actually talks a little bit about our Discord server, the Discord channel that's actually backing this YouTube channel. And so over there you will find that we are some investors talking about investing and all sorts of investments and topics. And it's interesting because all of us who share similar ideas in terms of value investing, we can meet there and chat about all sorts of different investment topics. And so I'd love to see you there. You can find the link in the description below, and you can watch this video that I'm linking to right now. Basically, you can just click on it and watch it. It's like 1 minute or so. So thanks for watching again, and I'll see you very, very soon. Bye bye.